Welcome to the channel, guys. Thank you for joining me today. Now in this video we are gonna uncover the realities that your gurus don't tell you when you are coming into the markets. Now if you are a new trader and you are coming into the markets, trust me, this is the first video that you should watch. And if you are a trader that's already trading the markets but you want to shorten your learning curve, this is the video for you. Now straight up, if you don't understand, if you haven't read the description, go ahead and click in the description of this channel. You will understand what this channel is all about and you'll understand more about me. So I don't want to waste any of your time, guys, but if you want to know what this channel is all about, you can go ahead in the channel description and click in it. Straight up you will find out what this channel is all about. So I have a summarized brief content about what I'm going to talk about today, about what we are actually going to cover today. Now in the introduction, which is part 1, Roman numeral 1, we are going to have the definition of trading. The real trading, not the trading that your guru told you, not the trading that you saw on a YouTube ad. The real definition of what trading is all about. We are actually going to uncover the potential for high profits, but the risks involved also. Now for part 1, we're going to have the reality of trading. So in the reality, we are going to have why the majority of traders actually lose money and the requirements that trading requires, which is hard work, discipline, and patience. You have to quote that last word, patience, guys. Now in part 2, we are gonna uncover the success rates of traders. In part 3, we are gonna uncover the factors affecting success in trading. Now in the factors affecting success in trading, we are obviously gonna talk about trading skills, risk management, emotions, and I'm actually gonna just have a brief. I'm just gonna talk about this briefly to get them into your mind and just have that cracking thought into your mind, because everything that I'm talking about here is actually broader than what I'm going to talk about, and I will have other videos talking about each of these in a broader way. So if you would like that, make sure you tap into the comment section and say you would like me to talk about trading skills, risk management, anything that you feel like. Just tap into the comment section and tell me, because this is a community, guys. This is a community to help us shorten our learning curve into the earning curve. Just cut off that L and we will be into the earning curve. So let's go. Okay, guys, so starting up with the reality of trading. Now we all know that trading is the buying and selling of financial instruments such as stocks, currencies, commodities, and more. We all know that, right? Now, we all know that trading can be done in various markets such as stock markets, forex markets, futures markets, and options markets. Now, here's the real deal. While trading offers the potential for high profits, it also comes with risks. Now, you have to think, like, before you put on a trade, if I put on this trade, okay, if I put on a 5 lot trade on a 500 on a $200 account, how much am I going to, because most of us think like, how much am I going to get, you understand? And you're like, I'm going to be able to double up my account in I can actually triple down my account in this one trade. But you're not thinking of what you're putting on the line, you understand? But after blowing up that $200 account is when you're going to actually realize that, oh boy, I fucked up, You understand? I messed up. Like this wasn't what I had to do. You understand? But because you came into trading with the mentality that it's a get rich quick scheme, you understand? You will just put on crazy lot sizes, put on crazy trades, and you'll think you'll go away with it, but the market doesn't actually forgive. You understand? If the market hits, it really hits hard. And another thing, like I wanted to tell you guys, is take an example. If you wanted to buy a Lambo right now, you understand? At your stature right now, at your status right now, you wanted to buy a Lambo, and the latest Lambo that has been dropped, how much do you think it would go for? So think about the money that you're putting onto the line for that Lambo. So before you think about the cloud and the loud noise that the Lambo comes with, you have to first think about how much is going onto the line. How much are you putting onto the table? How much are you losing? How much more could you use to do with that money that you're putting onto the line? You understand? So I want you guys to think about that as the risk you are taking to get that Lambo. Before you go in to think for the loud noise and the cloud, the bright colors, you understand? So moving forward, the majority of traders actually lose money. And it has been proved that 10 traders on 100 traders that come into the markets actually make a living out of this. Only 10%. You understand? So you have to understand, you have to think, you have to have a deeper think, like, what were the 90 people thinking about? What was their state of mind? You get? So, and only a small percentage of people are actually able to make consistent profits. Now, this is because trading requires a lot of hard work, discipline, and patience. You know, most of us actually come into the markets. I want you guys to connect with me. Like, most of us actually come into these markets looking at the brand new car, looking at like everything you can think of, the brand new Gucci belt, the brand new Gucci shoe bar. So as I was saying, guys, I want you guys to think deeper and deeper, and you have to know these things, that before you get into the markets, you have to first work on your psychology and have the discipline. That's actually the discipline that we are talking about. Before the hard work, you must have the discipline. You understand? And you have to understand that trading is not a get rich quick scheme, and there are no shortcuts to success. And most especially in trading, whenever you try to cut those shortcuts, I'm telling you, you're going to just slaughter yourself. It's like you are trying to have the shortest way to death. Whenever you try to look for a shortcut in trading, you're actually looking for the shortest way to death. And after looking for those shortcuts and you fail, you will come back to the markets and say trading is a scam. But when you came into these markets, you are actually thinking about shortcuts. You have to think about this as a business case. Okay guys, so it's time for our part 2. So in this part 2, we're actually going to talk about the success rates of traders. Now, we want to know how many traders actually make it in the world of trading. Now, according to various studies, the success rates of traders vary depending on the market and the time period. For example, a study in the University of California analyzed that the performance of day traders in the Taiwanese stock market from 1992 to 2006. The study found that only about 1% of traders were able to make a profit after transaction costs. The study also found that less than 0.5% of traders were able to make more than the average income of a bank employee. Now guys, before you throw out your phones, before you crash your TVs with a bat, this is 2006, and even if it was 2023, the 1% still exists. There is a whole lot of space in that 1%. So if you fight your way to be in that 1%, well and good, but times have changed. This is 2006. As you have been told at the beginning, success rates of traders vary depending on the market and the time period. So this is specifically, this is just the Taiwanese stock market. So, and let's move forward. Another study from the French financial regulatory body analyzed that the performance of retail traders in the forex market from 2009 to 2002. The study found that 89% of traders lost money and only 11% were able to make a profit. The study also found that the average loss per trader was 10,000 euros. Now, of course, most of you guys feel like, now this is crap, man. This is crap, you understand? But the reason I told you this is the reality, your guru will never tell you now. This is where the point is. These studies suggest that the success rates of traders are quite low. However, it is important to note that these studies are based on specific markets and time periods, and these success rates may vary in different markets and time periods. It is therefore not surprising that not 50%, but only 10 to 20% of all forex traders make a profit. Second, even those traders who suffered a 100% loss on average completed 48% of trades with a profit. Now, this is a big banger, because if 10 traders who suffered a 100% loss on average completed 48% of trades with a profit, now this is actually giving you a clue. If you can actually complete 48% of trades with a profit, but you still end up with a 100% loss, then you have something to work out. Now, the other thing I've actually seen is the 10 to 20%. The reason for this video is to actually get you in the 10 to 20%. That's why most of you guys are actually going to skip this. Like, this is relevant, man, you understand? But to get into the 10 to 20%, you actually have to have a mindset that the 80 to 90% don't have. You understand? And this is what I'm actually giving you guys. This is what I want you guys to understand. To get into the 10 to 20%, you have to do what the 80 to 90% aren't doing. And it's not something easy, but it's not something hard if you're really dedicated and disciplined enough to follow, because these things have already been done. There's nothing new that is going to be done. All we have to do is to follow the 10% that are already in the 10% niche, such that we can also get into the 10 to 20% niche. We can all fit there if we accept the reality and accept what trading is all about. We can all fit in there. This is part 3, our last part of the video. So in this part, we are going to be assessing the factors that are affecting trading success. Now, starting off with risk management. Now, risk management is actually, this is a factor that most of beginner traders just don't want to hear about, or if they don't want to hear about, they're afraid of, I don't know, but most beginner traders don't want to hear about this part. But this is actually an important part, especially if you're a beginner trader. because at the end of the day you will end up making profits and losing them all in one trade. Now, I've been a victim of risk management because I've actually blown up a lot of accounts. I can't even I think I've blown up close to 20 accounts right now, and it's been a roller coaster of a journey, but I'm here to tell you guys we ain't giving up, because it's just the beginning. We can't give up at the beginning, bro. So risk management is actually an essential part in trading, and you can't just get a shortcut to risk management, because you'll end up making profits, but that one trade, I promise you, that one trade, you see, you can't get over the markets. You can have a winning streak, but you have to know that the losing streak is also coming, because nobody does not have a losing streak in forex. So if your guru told you that, oh, this course, if you buy this course, you will be assured to get winners throughout, my friend, your guru was just making money out of you, milking money out of you. So let's start with risk management. Now, these are broad topics, and I can't, if I tell you that I'm covering them right now, I'll be lying now, because these are very, very broad topic. You need to make more research about them, read some books about them, or get some podcasts about them. And if you like me to make a video about this, any of the things that I've mentioned in the video that you've not understand, just comment in the comment box, in the comment section, and I'll be answering you. And the most commented factor, I'll make sure that I give you guys a video, because we are here to help each other. Now, risk management involves identifying, assessing, and managing potential risks to your trades. Now, before you take on a trade, you have to identify how much are you ready to lose. If you remember the example of the Lambo that I gave you guys, if you want to buy a Lambo, you have to understand how much money are you ready to put on the table for that Lambo. You understand now? That's the same thing for trading. If you are going in for a trade, you have to assess and identify, okay, so I want to take this trade, but how much money am I ready to lose? Which, like, the kind, and you have to put this in your mind, you have to lose the kind of money that won't hurt your emotions. Now, if you are putting $100 on the line because you saw a YouTuber put $100 on the line, or you saw your guru putting $100 on the line, our emotions aren't the same. The way you react, if you lose $100 and your emotions weren't ready for that loss, trust me, you're gonna snap. And if you snap out of it, you snap out of the zone, then things will really get ugly. Now, techniques such as diversification, stop loss orders, and position sizing can help minimize losses. If I'm too fast, guys, you can tell me in the comment section. I will try to slow down. Now, stop loss orders and position sizing. So position sizing is then the number of lot size, or let's use lot size. Okay, the number of lot size that you are going to use. Is it a 0.01, a 0.05? As I told you, these are broad topics that need their own videos. Stop loss orders. So a stop loss order, for those of you guys that don't know what a stop loss order is an order to get you out of the markets if the markets are actually going in the opposite direction. You set a stop loss order. Let me give you guys an example about a stop loss order. Now, for example, if you bought right here, as you can see, so if you bought right there, I'm going to give you a simple example. So if you bought right there where you see our kind of black line, that line there, and your top profit was somewhere there, now you set your stop loss somewhere there. Now if you bought right here and you are expecting markets to reach this level, if markets reach here, then you will immediately get out of the markets automatically. You will be taken out of the markets. Now that's what we call a stop loss order, and we shall get into those terminologies. If you want me to discuss the terminologies, then comment in the comment section and tell me, discuss the terminologies, and I'll try to make up a video for you guys in the next upcoming videos. So the next thing that we are going to talk about is trading skills. Now trading skills such as technical analysis, fundamental analysis, market knowledge are crucial for successful trading. Understanding charts and indicators, analyzing market economic data, and keeping up to date with the market can help make informed decisions. Now this is important because I have actually, one day I was trading and I didn't know that we had NFP coming when I was a rookie trader. So NFP was actually coming that Friday. So I was in a trade. I was like, man, this is a saucy trade. It's a saucy one. It's a juicy one. So this fundamental thingy wasn't my thing because I wasn't somebody that was interested in fundamentals. But I took on a relatively large lot size because I saw the market was having high volatility, and I was like, man, if I get this quick volatility, then I'll step out quickly and I will call it a day. As soon as I had placed my trade, NFP was released. Damn, NFP hit my stop loss, and I was like, damn. I felt like, I don't even know. Do you know, like placing a trade and in a matter of seconds, like seconds, literally, my stop loss was hit. I felt like, I don't know, but trust me, that's not a good feeling. So you must keep up with the economic events, especially the economic data that is being released. You have to keep in mind that there are major economic data releases that happen month in, month out, and you have to keep up to date with those fundamental economic events. Now for the fundamental part, it's a big topic. It's actually a big topic, and I'll try my best to actually gather up some information for you guys and create a video for you guys. So if you like that, hit the like button, hit the subscribe button, and tell me in the comment section what's the biggest problem that you've had in trading for the past time you've been trading. Tell me what has been the biggest problem that you have been having. I will group the comments into 3: the most commented, the second most commented, and the third most commented. So the first most commented, I will make sure that I upload a video for you guys, and the second will follow, and the third will follow. So make sure you hit the subscribe button not to miss out. So the third, and this is the most important factor in trading, it's emotions. Because trust me, I've snapped a lot of times, and I'm still working on this, because emotions is not something that you can work out for weeks or just months and you think that you're done over it. But emotions is something that you really need to work out on. So emotions like greed, fear, and overconfidence can lead to poor decision making and increased risk. So sticking to a plan, taking breaks, and participating mindfulness techniques can help manage emotions and avoid impulsive decisions. Now, so emotions, you can call it trading psychology. So some people actually do meditate, but I actually fail to meditate. I don't know what's my problem, but I fail to meditate because I usually do exercises, and everyone has his peaceful mind of state. Because me, something that makes me peaceful is actually listening to music. So every time I feel like I'm going to snap out, I just get my music, increase it to maximum volume, and then listen to some music for about some 30 minutes, and then I'm back to my my emotions. So emotions is actually a big factor that can't be just left over there, and it's actually a big and broad factor that needs to be exhausted furthermore. But as I told you guys, I don't want to make a century video, a video of 50 years. I want you guys to just go, and if you want, you can rewind this video and watch it again, because this is the reality. And before you start trading, it doesn't matter whether you've been trading, but before you go back to the markets, you have to first understand the realities. And before you place that next trade, you have to change your mindset and tell yourself, snap. Whenever you try to go back to your usual ways of thinking the market is a get rich quick scheme, then that's the easiest shortcut to death and to blowing up your account. So I don't want you guys to quit because you came into this thinking this is a get rich quick scheme. I want you guys to be patient, build that portfolio little by little. I'm telling you, if for the first day it won't be easy, for the first week it won't be easy, because I'm actually still in that process of me myself, I'm in that process. So I want us to hold our hands together, because as a community, and if we hold ourselves together, we know we can go over this. This is not something hard, guys. It's not something hard, especially if you have some people with you that are going through the same condition as the same condition that you're going in. Trust me, it's not a hard journey, and it's something that can be overcome. So in conclusion, developing a good risk management strategy, honing trading skills, and managing emotions can increase your chances of success in trading. Thanks for watching. Make sure you hit the subscribe button, make sure you hit the like button and if you have a question, hit the comment box, hit the comment section. If you want to know more about me, hit the description of the channel, or you can send me a direct question through the comment section. I will reply